Let's go take a look at markets as we close out the second month of the year. And it was a bounce back day overall, green across the board. You have the NASDAQ up 1.6%, S&P up also 1.6%, Dow up about 1.4%. Like I said, green across the board. If you're watching on YouTube, you'll see I have all of these. I have the heat map of the S&P, and you see only a handful of red names. And so that's a nice close to the week. However, it did not close. The SP did not close above yesterday's high. So that's what I'll be watching for as we head into next week. Nice, we hit support. And when you have a market pullback, which I think we're in the midst of to some degree, usually you get these bounce days. The question is, can they close above the previous day's high? And that's an indicator that maybe the sell-off is behind us, at least in the short term. So I'll be watching that, like I said, to see what yesterday, if next week we close above yesterday's high. Nvidia was up 4% on the day. I won't list off all of them, but what I want to show is the weekly chart, or the weekly performance. So yes, today was nice, but Nvidia for the week was still down 11%. Microsoft down 5%, Google down 8%, Meta down 4%, Amazon down 5%, 17% for Tesla on the week, negative. So, but still, some areas of strength, obviously consumer staples, healthcare. You get Visa and MasterCard up. Some of the financials were even up, but even some of the financials were down too. So kind of a mixed bag there, and something to continue to watch to see if there's any more unwind. Other riskier names, the Blackstone was down 2% on the week. Morgan Stanley down 1.5%. So the broker dealers certainly weaker than some of your traditional commercial banks. So that was the week as a whole. Certainly bearish overall. I still lean a bit bearish in markets, although obviously you can get bounces, especially with so much overhang and so much uncertainty on the geopolitical front as well as economically. So let's start off with the economic side. You had PCE, which is something the Fed certainly likes to watch. That came in at 0.3% month over month, in line with expectations, and was accepted dovishly by markets, basically saying, hey, the Fed might be more apt to cut rates sometime over the next few meetings. I think they'll probably cut in June, maybe earlier, but my base case right now is June for them to resume their cuts. One thing that you have to consider too, which I'll show you this chart, which is the GDP now figure went negative. It's now at negative 1.5%. Now, for a lot of people, that might be alarming, but this is what we think is just a lot of imports. So companies front running the tariffs and saying, hey, I don't want to wait until the tariffs hit me. I want to get as much inventory as I can in now. And that widens the trade deficit in the short term. And you likely get a bounce back in Q2 once those tariffs are implemented. So I think it's a bit extreme to say, okay, this is the start of a recession or anything like that, but certainly could be at some point. But this is more around trade dynamics than real economic weakness. What else? Oh, on the tariff front, it does look like, barring any major changes, Canada and Mexico tariffs will be implemented early next month, although there's still rumors of that being pushed off once again. So we'll see what happens there. The Citi U.S. Economic Surprise Index, that is very low, so you continue to see, once again, that negative news on that front. But overall, you have to be neutral to slightly bearish on the markets just based on the recent weakness. Obviously, a rollover in some of the bigger names, NVIDIA and some of the other tech names like Tesla, certainly very, very weak. And if that continues, that will drag down the whole market. You see crypto, I said it broke, Bitcoin breaks 90,000. That is a clear indication that liquidity is drying up in markets, and that usually feeds into equities. And that's kind of what you're seeing right now. So that's how we closed out the month of February for 2025.